Gerald Lucas here with another installment of Ask Gerald, where you get your real estate questions answered. Today's question comes from Carl. Carl writes from the Bronx, New York. Carl writes, Gerald, my mortgage broker told me that he offers stated income loans now. How will the return of stated income loans affect real estate? Well, that's a great question, Carl. You know, stated income loans are often cited as one of the main causes of the financial crisis of 2008. Obviously, there were a number of factors, but that's certainly one significant factor. And if you're not familiar, in the early to mid 2000s, many banks were approving mortgage loans without verifying income, pay stubs, tax returns, etc. You know, these were called stated income loans. But bank lending requirements have tightened significantly since then. And in fact, by current regulations, if a bank doesn't take reasonable steps to verify a borrower's ability to repay a mortgage, that mortgage actually can be challenged in court. But stated income loans have cropped up again now, but in a different way. So as a result of the Dodd-Frank Act of 2010, stated income loans for owner-occupied properties are essentially illegal. So they're not lending for a home to actually buy in. But you can get a stated income loan now for a home that you intend to fix and flip, so renovate and sell, or for rental properties. So again, stated income loans are back, not for owner-occupied, but for investment properties. And there are some advantages and disadvantages to these new stated income loans. One of the advantages, obviously, is that they require less documentation. So what that means, theoretically, is that these loans can be done faster, which is a benefit to investors who may have a narrow window of time to make a decision on whether to buy a property or not. And a stated income loan for a fix and flip or a rental, because it can be done faster and it requires less documentation, is certainly one advantage. However, expect to have a higher than standard credit score in order to qualify for a stated income loan, and expect to pay a higher interest rate, higher closing costs, and a bigger down payment. So those are some of the disadvantages of current stated income loans. But to answer your question, how are stated income loans going to affect real estate now? And essentially, what stated income loans now do is provide an additional financing option for real estate investors. So thanks for your question, Carl. For more real estate tips and information, visit my blog at geraldlucas.com. I'm Gerald Lucas, and I'll see you again soon.